Good evening, everyone. Welcome to the May monthly meeting for the Board of Finance. Would everyone please rise for the Pledge of Allegiance? Can I ask Mr. Stone to lead us in the pledge tonight?
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
That's right. All right.
After that, everybody else can.
First order of business, Mr. Kiley did phone ahead and said he'll be a little bit late due to a business conflict, but he will be here shortly. This evening, we've got 4 main items on our agenda, and those items are to approve the Board of Finance meeting minutes for the Board of Finance public executive session on March 31st, and the regular meeting on April 5th. The second item is to hear, consider, and act upon a request from the tax collector to transfer tax receivable to a suspense account in accordance with Section 12-165 of the Connecticut General Statutes. Item number 3 is to appoint the auditors to conduct the audit of the town's financial records for the fiscal year ending June 30th, 2011. And item 4 is to consider and set the mill rate for the fiscal year beginning July 1st, 2011 through 2012. Based on the recent budget process that was wrapped last night, as well as the assessment appeals and things that were wrapped Monday evening. All right, so without further ado, let's get to the minutes. Item 1 on the agenda, does anybody have any questions, comments, concerns on the minutes from those 2 meetings? Seeing none, do I have a motion? Mr. Bolito, do I have a second? Mr. DeWitt? All in favor of accepting these minutes? Opposed?
I want to abstain from the April 5th.
And abstentions. Okay, so you want to abstain just from the April
5th.
5th, and you're fine with the March 31st? Okay, do you have that? Okay, so item number 1 is dispatched with. Okay. Item number 2, to hear, consider, and act upon a request from the tax collector to transfer taxes receivable to the suspense account in accordance with Section 12-165 of the Connecticut State General Statutes. Hello, Mr. Gorzlani. How are you?
Evening all.
Nice to see you again.
Good to see you.
Can you remind us what the statute is that is referenced in this?
Yeah, it relates to, it specifically relates to the transfer of amounts we consider to be uncollectible to a suspense book. Basically, that removes these assets from the active assets of the town, and I liken it to an allowance for doubtful accounts in private accounting.
Okay.
As I say every year, we always continue to try and pursue these accounts, and in fact, we do collect amounts over and above, what we have transferred to suspense.
And how does the accounting work once accounts that have been transferred to suspense, once those funds are recaptured? How does that accounting work?
Our system is set up to actually bring that account back out of suspense, and then, the payment against that would be applied, just as it would to an active receivable.
So it comes out, how does it impact revenue? Does it come back as current year revenue or prior year levy?
I don't know, I'm going to leave that to the fiscal officer to answer. It actually,
It shows up on the, as to what's been transferred and what the,
Does it show up as a revenue item?
I'm sorry,
It shows up as a revenue item?
not, well, if we collect on it?
Yeah.
Yeah.
Oh, yes, yeah, it shows up,
As prior year levy, right?
that's correct, yeah. Just
yeah, and actually, on the,
in reducing that other, it'll be a hard one to find in the statements.
what I was going to say is, on the books of the tax collector, it's actually a wash. It comes out of suspense, and it's
It
wiped
moves
out.
over. Yeah. Okay.
The amount I'm asking be transferred to suspense this evening is $23,039.18 in personal property taxes and $110,109.88 in motor vehicle taxes, for a total of $133,149.06. The larger report I gave you is a listing that adds up to those numbers. The single sheet I gave you is just kind of a summary of what what list years we still have open that have not been transferred to suspense, excluding the current fiscal year. And if you recall, I do not transfer any amounts out of the current fiscal year so that I can get an accurate calculation of what the collection rate is. I know that some collectors immediately transfer money out of the current fiscal year so that their collection rate will look better. I do not do that. So you will not see any 2009 accounts on the list. The single sheet, what I'm proposing tonight is that we transfer all the remaining receivables still open in the 2004 list year to suspense, along with a number of other accounts that we consider to be uncollectible, either in cases where the taxpayer is deceased and there are motor vehicles outstanding, or in cases where businesses have gone out of business and we do not expect collections of those amounts. As you could see on that single sheet under the 2004 grand list, which I'm proposing be transferred tonight, we collected in the past 9 months only 4.4% of that. Usually this, as you go down the list, the balances do drop, but as you can see, the 2004 list was higher because, if you recall, that occurred just prior to our last revaluation, and the 2004 grand list for motor vehicles was $11 million. The 2005 list for motor vehicles dropped to $8 million. So that's the reason that the balance is higher in 2004 than it would have been, that it is in 2005. Just to go over my philosophy about when to make this transfer, the 2004 grand list was billed in July of 2005. We attempted to collect it currently for 1 year. Then we allowed the 2-year registration cycle to finish before we transferred those assets or those receivables to our collection agency. They have been trying to collect for 2 years, and after that point, I suggest that we transfer it to suspense.
Questions, comments from board members? Mr. Gorzelani, so what you're saying is the 133, 149 that you're asking be transferred, within that number is the 72,991, is that correct?
Yes,
Of 2004, and then some amount of 2005, which is based on a specific account review,
exactly, and 2006, 7, and 8 also, yes.
and 2006, 7, and 8. So really, in the way I would look at it is, your general allowances for everything from 2004 back, and then you're specifically reserving for specific accounts from 2005 forward. Is that a fair way to look at it?
Yes.
Okay.
It's on that last sheet.
Yeah.
Breaks it up.
Yep, thank you. Go ahead, Mr.
Thanks,
Rafa.
thanks, Chairman, Mr. Chairman. First of all, I'm happy to say I looked through the list, I didn't see myself on it, so I'm feeling good about that.
You might see yourself on it for a penny or something. But
Yeah, no, even for a penny, I'm not. But actually, the only question I have for you is, I'm looking at the list, and they're all relatively small amounts. I don't see anything above $1,000 unless I missed anything, and or if there is, there aren't many. So I'm just wondering what happens if someone owes a lot of money,
Bless you.
and they die, or the business closes or something. I mean, or it strikes me we must have outstanding balances that are higher than these somewhere.
Probably if you look toward the end of the listing where there are personal property taxes, some of those are, for example, in 2008, under personal property, at page 27, there's a restaurant there that has 1,900
Right.
outstanding. It's interesting you raised that question because Town Attorney Saxel called me the other day and said he had gotten the bankruptcy for Borders, and asked me if we should file a proof of claim, reminding me that personal property taxes are not secured, therefore he didn't necessarily think that would be a good idea. And what I told him was, the moment we heard that the Fairfield Borders was closing, I sent a letter to Borders under what's called a jeopardy collection, different statute, demanding the 2010 taxes in full, based on the current estimate of the mill rate at that time. And we did successfully collect that.
Yeah.
So we don't wait. When we hear a business is closing, we go after them immediately. And if we catch them soon enough and they don't respond to our 10-day demand, we will send a state marshal out to start grabbing equipment or start tagging equipment so that they cannot remove it until the taxes are satisfied. So that's why a lot of these numbers are relatively small numbers.
Because the larger ones, you're more proactive in getting the...
Exactly.
Thanks.
Mr. Stone?
Do you have change? I owe 45 cents.
No, not tonight, I don't.
Well, here's my debt.
Notice that, Bob.
It's gotta be me.
That's page 22 for those of you.
S-T-O-N-E.
Yeah, okay. Anybody else have any questions?
That's embarrassing.
Now he's got it on film that he pays the bill.
Yeah, one, does that include the interest?
That's right.
All right, Keith. Let's calculate that, Ms. Everett.
One question on the last page that Mr. DeWitt did point to earlier. The one thing I did notice is we have an amount there from 1999. Why would that still be on the books if we've written off everything from 2004 forward, backwards, rather?
You know, I don't know the answer to that. I just accidentally ran across that because we had sent out, where our collection agency had sent out a notice, and we received an envelope back saying that he was deceased, and it had just never been written off prior. So it was just a fluke, really.
All right. Any other questions, comments, concerns here? Seeing none, do I have a motion? Mr. Polito, do I have a second? Mr. Brockfeld, all in favor of transferring from the, at the advice of the tax collector, transfer taxes receivable to the suspense account in accordance with Section 12165 of the Connecticut General Statutes in the amount of $133,149. All in favor? Opposed? Abstentions? Motion passes, and I guess I have to sign these documents on behalf of the board?
Yes, the two that you have, you and the secretary.
Okay. So I'll sign at the top. Today is the, so it's 5/4. Chris, if you can do that? I have to sign 2 copies, right?
Correct.
Sign at the bottom. Yeah.
I feel like I'm in Belito's office.
Except this one, you don't get charged.
Yeah.
So there you- All right. Scores a lot. Thank you
Thank
very
you.
much. And we'll give you your documents so that you have them. Thank you. I'm going to pass these down to Mr. Hiller to make sure he has them.
Oh, sure.
Thanks. All right. Item number 3 on the agenda, to appoint the auditors to conduct the audit of the town's financial records for the fiscal year ending June 30th, 2011. I'm going to turn it over to Chairman of our Audit Committee, Mrs. Leclerc, as well as if Mr. Hiller has any comments on that. Please.
The audit committee met very briefly to discuss the recommendation, and we agreed to recommend that we reappoint Koskin Rufkus as our auditors for next year.
Okay, so any other questions, comments from board members on this? Seeing none, can you turn that into a motion? And we'll,
Okay. I'd like to make a motion to appoint Koskin Rufkus as our auditors to conduct the audit of the town's financial records for the fiscal year ended June 30th, 2011.
can we have a second on that? Mr. Brown and Mr. Brockfeld, all in favor? Opposed? Abstentions? That item carries. So they are now appointed the auditors, and they're going to continue on with their engagement as they did in prior years. Okay? Item number 4 on the agenda for this evening, to consider and set the mill rate for the fiscal year beginning July 1st, 2011, and ending June 30th, 2012. Okay? Mr. Hiller, we spoke of,
Thank you, Mr. Chairman. There's a couple of things. I did pass out a sheet, and I have some extra copies here in a second for the public. I'm also distributing to you, as you are probably aware, at some point within the last 24 hours, the General Assembly did pass a new adopted budget for the state of Connecticut. I believe the governor has either signed it or fully intends to sign this budget. What I did want to pass out, because I think one of the key questions before this body tonight is obviously the revenue. 90% of our revenue comes through taxes. Obviously, there is, in the two documents that I have passed out, one from the Connecticut Conference of Municipalities, which was sent yesterday, and also an update on a document which we passed out, I believe, at the February 17th first meeting of this body, as to where we stood from our budget estimates and what the governor had initially estimated on February 16th, which is the second sheet, which you folks have.
Yes, Mr. Tetra. Mr. Hiller, please help us out.
Yeah. Basically, if you look at there's the press release which we received from Connecticut Conference of Municipalities late yesterday at the First Selectman's office. The second document which I passed out, two sheets. First off, the sheet which we distributed in mid-February following the governor's address, which indicated that we would have a variance in the budget if the governor's proposal was adopted of $1,244,603. What we've created today, based on the Senate and subsequently House action at the General Assembly, corresponds to what has been passed by both chambers of the House.
So, Mr. Hiller, if I read this correctly, just cutting to the chase, they've cut a budget, or they've approved a budget that would have the town's revenues increased by $234,000.
$234,000. And essentially, it, just to really cut to the chase, the two big variances in these documents, well, there's several variances, but we're, as you point out, Mr. Chairman, $234,000 to the good. Where it varies from what was in previously is the reinstitution of the manufacturer's equipment in lieu of taxes, which is just under $83,000 in our case, and also the new property tax relief grant, which is a combination of various factors from the taxation package passed by the General Assembly, primarily an increase in the conveyance tax of 1/4%, which we don't get, but it is embedded in here, and an increase in the sales tax of 0.35%, which is 0.10%, 10 basis points is distributed back to the municipalities. There is a formula, which I'm not privy to, which is described in part in the CCM document. Net, again, from where we were in the budget and what our document is based on, if this all comes to pass, and obviously I think you realize also that a good portion of the governor's budget is based on assumptions of major concessions from the labor unions, that we would be $234,000 ahead. My personal reaction is, and that the estimates that we've shown here this evening on our tax rate calculation is that the $234,000 is not reflected in our calculation, or in my calculation for the tax rate.
Okay. So, Mr. Hiller, if I can summarize kind of the ins and outs of what we have here, and thank you for that. We've had 4 items that could necessarily impact the tax rate between when we voted on the budget on March 31st, right, and this evening. And those 4 items are, number one, to the good, is what the state government did
Potentially.
for $234,000, so that's upside.
Actually, we were negative on that going into this, and so
Right.
we picked up,
Right. And that's not factored in to the new budget?
that is correct.
Okay. So that's 234 to the good, not factored in. In addition, the RTM adjusted the expense level from what we had by about $960,000.
Correct. And there is a control sheet which I distributed to the board this evening, which reflects those changes.
And the mill rate calculation that's in front of it does reflect that.
It reflects,
Okay.
it does reflect that expenditure level.
Okay. The other item that we were aware of, that we discussed at our last meeting, related to a change in the waste treatment plant and the
Solid waste,
solid waste plant.
solid waste.
Thank you. And it was the difference in what was now going to be going to recycling and what used to go right into the garbage, right? And be treated. And through documents that we received today, our concern was that was going to impact our revenue. It would have an expense side reduction to a degree, but it would also impact our revenue. Through documents we received today, we found out that that's already been factored into the budget, right? That the numbers that we
An
put
estimate on that, there's a two-page memo, Mr. Bowman's here, Mr. Zimbruski and Mr. White are here and are prepared to discuss that if necessary. Essentially, what they're saying is, we don't know, it's difficult to estimate. We're going there, along with 9 other communities in the region, and the experience in Hartford has been mixed, in the Hartford region.
What they did do, and they did, and I want to look at the gentleman, you did put an allowance into the budget factoring in this change. So to the best of your ability, you've estimated what the impact is to the revenues. And that's also factored into the budget. Okay, so we have factored into the budget the reduction of expense from the RTM. We have factored into the budget the best estimate of the impact on the revenues because of the change in recycling. The third item we had was the Board of Assessment Appeals had not concluded their work. As of yesterday, or rather Monday evening, they did conclude their work. We have a memo here that indicates that as a result of clerical corrections and Board of Assessment Appeals actions, the 10/1/2010 grand list certified on 2/28/2011 was reduced by $25,592,470,
That is correct.
right? So that the grand list is now, as factored into this budget, $10,787,725,630, right? So that's factored in. So we have 3 items that are factored in: recycling, RTM, and the assessment. You're right. On the upside, and I apologize, guys, I'm just trying to cut through it, and please tell me. On the upside, we have government grants coming from the state that are estimated to be $234,000 more. On the potential downside, and I did some research on this today, and we don't have an answer on this, is any increase in unemployment compensation due to the budget cuts, particularly on the Board of Education side.
We don't have that. Dr. Title obviously indicated during deliberations, particularly at the RTM level, that there would be personnel reductions. What they're going to be, and obviously what we don't know also is the ability of, if people are laid off, is their ability to get additional employment.
We also don't know how many people are planning on retire that it might not.
That is correct. What their attrition level is.
Or leave their jobs if they're not of retirement.
And as I think he pointed out at the RTM level, it doesn't always, it's not always the most junior person because it depends where they are. Do we lose a science teacher? Do we lose a third grade teacher? Do we lose a phys ed teacher?
Right.
What do we lose?
And by documents that I saw earlier today, that information is not going to be, well, it certainly won't be known until people announce their intentions to retire and all that. But in fact, the plan that the Board of Education adopts isn't going to be known until at least mid-May, based on
Easily.
some documents I saw.
Right.
Okay, so as we sit here right now, the unknowns, right, are the impact of that on unemployment comp, and the potential upside we have from the government is the 234. And neither of those are factored into,
That is correct. I think the one other thing that I would point out, and maybe we're going there also, is the one other factor that we don't have in here is, and in the tax rate calculation, which I distributed, perhaps, Ms. Garaville, you can put this out for the public also. The last bullet point on the assumptions that I put in here, there is no adjustment recognized for pending appeals in the Connecticut Superior Court. Normally, after a revaluation, we know of, there were 20 properties who filed appeals with the, 20 commercial properties with values in excess of $500,000, which under the statute were transferred automatically to court and were not heard by the, some of those cases have been filed. The question is as to how rapidly they will be adjudicated. And we're talking a period here that really is from today, essentially the next 14 months, as to whether or not, Attorney Bolito could probably, and we all know the courts can grind exceedingly slowly, but at sometimes also there may be some accommodation between the town attorney, the assessor's office, and the appellant on these matters. There are, several substantial properties involved, both Stop and Shops, Kohl's, the Pequot Yacht Club, just as an example of 4 of them that are, that have filed.
do we have questions from board members on the calculation? Mr. Tetra?
Thank you, Mr. Chair. First off, for any one of those, what happens during the appeal? Are they paying their taxes, or are they withholding those?
Mr. Gorzolani can correct me, but they have the right during an appeal period to withhold up to 10% of their taxes without penalty.
Correct, I believe that.
Up to 9, to withhold 10%.
Yes.
Yeah.
It depends on the assessed value of the property. I believe if the assessment is above $500,000, they could pay up to 90% while they are under appeal. If the assessed value is below $500,000, they can pay up to 75%.
Okay. Do we have a
But they're,
hand?
they're taking the risk that if they lose the appeal, they would pay interest on, whatever they were short.
Our experience has been, and Mr. Gorzolani can correct me, is that they really, in the most cases where there have been appeals, that they haven't withheld, that they'll pay, and then we have to issue credits back. The reason I make this point is that in fiscal 13, we would because that's when the majority of the settlements would come, because they would work their way through the process. We would sit down with the assessor, with the town attorney, and at that point, we'd make an estimate that we think we're going to reduce this grand list by $10 million, let's say, or something like that, and then equate that to a dollar amount. What I'm telling you here is that there is no reserve for any settlements due to litigation at this time, or due to not litigation, but due to appeals on value.
So if I understand that correctly, that means we have not, we're pretending none of those court cases are taking place, and we're just pretending they're still in the grand list, and we're just pretending they're going to pay us the full amount and not withhold 10%.
Yes, and I think, then you get into the other factors that, we're also pretending we're not going to get $234,000 extra from the state. That
Well, let's stick with the tax collections
Yeah.
just for a moment, because you're right, there are a bunch of other factors we get into. But just on the tax collections, so how much money is, at risk at the moment because of this? If they all win, what's,
Well, I think we haven't, first off,
forget all risk, what's the 10%? Because that'll
I
be
think,
the immediate impact.
I think we're probably looking, the 10% number is probably something in the $250,000 range. And that's really, and that assumes on the properties that we're familiar with. We don't know, for example, and the people have not yet been notified on the residential properties, on the 600 residential properties that were heard. We don't know if there are appeals going to be filed on that. Even if there had been reductions, people say, you didn't reduce it enough, or in many cases, they didn't reduce it at all. So,
I'd be more worried about the folks where their assessments went up, I think, might be the target appeal folks. And we won't know that till June or whatever, from that standpoint.
you've got a ways to go.
So we've got
And-
$250,000 potentially if some of that 10% is withheld as opposed to being paid.
Potentially, I would think, maybe not quite that much as far as the 10% factor being.
And to evaluate that, if one of the people that's appealing, or one of the businesses that's appealing, pays their entire tax bill, and then wins their appeal, do they get credit for that? Does that,
If they had paid their entire tax bill, we
So-
would issue a credit back.
It would be their option. They could get it refunded, or we could credit it for the
Okay.
next installment or their next
All right.
bill.
Yep, just-
depending on the timing.
okay, thank you. I'm just trying to get down to what their decision process is. So basically, if they withhold the 10% and lose, they pay 18% on
Correct.
whatever the,
And
They lost.
that's why, historically, we have not seen people,
and if they pay it, they're basically, it's a cash flow issue. I'll get to use it towards future taxes if I don't take a credit right away on it. So it's in their financial best interest to go ahead and pay the full tax amount.
correct.
Okay, thank you, Mr. Chair, just trying to get the magnitude of the risk there.
Any other questions, comments, concerns from board members on this? Yeah, Mr. Brockville? Oh, I'm sorry, you were done, right? On that one point?
questions, but I thought I'd let other folks chime in.
Yeah, let's go, Mr. Brockville.
I'm just a little, one quick question for Paul is, what happens if we lose an appeal?
If we lose an appeal, they get a credit back, and as Mr. Gorzolani, we don't totally lose an appeal, obviously, there's going to be some assessment, it's just that the assessment is reduced,
That's what I meant.
and their
Yeah.
taxes are recalculated based on a new assessment.
And that affects this budget that we're working with.
It potentially does.
So I guess,
And that's the point that I would say, in the ensuing year, we will carry, depending on the number of cases that are out there, we'll carry a fairly hefty reserve for that. We have no reserve in this number for that.
so I'm sorry, I apologize maybe for being a little confused here. So Mike brought up an interesting point about the 10% and the cash flow, but why are we not talking about the possibility of not winning every single case that is being appealed? I mean, isn't it almost by definition, some are going to be won and some are going to be lost, and there'll be a reduced amount of tax revenue coming to the town?
There's likely to be a reduction. The question is, when does that hit?
Doesn't affect
Now,
those taxes.
now realize this also,
Right.
if someone wins a case in fiscal 13, we will have to rebate them the taxes that they paid for fiscal 12. And that's where,
Okay, so I think actually the answer to the question, and this is where I was confused, and I apologize, is that that issue doesn't affect this year's budget, or it doesn't?
Depends on when it gets settled.
Okay, well, what, under
depends
what
on, if someone settles it a year from today,
Right.
and they have paid their full 4 quarters of taxes, we would owe them whatever that adjustment is, and we would owe that prior to June 30th of 2012.
So, and in that case, it would affect,
It would impact this. As I'm saying, we wouldn't anticipate in the normal course of the way these things progress, that there would be very many settlements in the coming fiscal year.
okay. So our experience in past history has been that it takes longer than within this fiscal year
Yeah,
for this.
the
Okay.
big year is going to, the big year after a reval is the second year. That's when it'll really hit, and to a lesser degree, and then it'll trickle down. We've had cases on the reval of 5 years ago that were just settled this past year, or during this current year, I mean to say.
Mr. Stone, I thought you had your hand up?
No, I had a different subject, so.
Okay. Does anybody have anything else on this subject? No. I have a quick question. So we can charge them 18% if they've withheld and then they lose. Do we owe them interest if they pay us and they win?
No.
Wow. Yeah. It's good to be the government. Okay, if there's no other question, I'm going to go to Mr. Stone first. Mr. Stone.
The question I have is not on this, but what about, I keep getting emails, or I got some today, about referendums. So how do we,
Well, the
Cover
impact of a
ourselves.
referendum, I think we have an obligation, since we now have the two main numbers. We've got a Board of Assessment Appeals grand list, and we have a budget approved by the RTM. It is now the obligation of this body to set a mill rate based on that. If there is a referendum, in whichever way, and obviously there's talk of a referendum to raise this, we would then have to reconvene after the results of that, if the referendum were successful in whichever way, and the budget is adopted by the RTM was modified, either up or down, we would then have to reconvene and reestablish a mill rate based on that new number. So that, and at that point, it's my responsibility to direct Mr. Gorzolani to take the grand list, which Mr. Brown has done, and to bill at that particular rate.
Yep. Mr. Polito?
Thank you, Mr. Chairman. On the unemployment compensation, I'm a little concerned about that. It's a number that we obviously have no idea how it's going to come in terms of the number of people who are going to be affected by that on the Board of Ed side. Have you constructed a worst-case scenario number, or are you just kind of hoping it comes in at something?
We think that the budget that has been adopted, the $200,000 number, is, given what we're experiencing this year, is okay. That we're certainly going to, we believe right now that we're going to probably be under that number for this year. That being said, I think the big question is the Board of Education as to what, obviously, a $2.8 million decrease in their budget is going to impact their staffing. And Dr. Title has clearly stated that that there could be impacts there. Just as an example, I've seen cases with teachers who have been collecting unemployment benefits and who have had it, and if one individual can cost us in excess of $500 a week, if there is. So, I mean, it can move pretty dramatically if there were significant layoffs particularly at the full teacher level, not so much at the paraprofessional level, because obviously those salaries are less, but benefit levels can exceed $500 a week for obviously 52 weeks or for the entire fiscal year.
Right. Now, I remember a couple of years ago when we had the situation where we were in the hole by $2 million, and there were some early retirement packages extended in order to cut payroll. And one of the things that we had talked about back then was what incentives were given to get those, golden handshakes, essentially. Now, in this situation, you mentioned attrition and the fact that some people might take early retirement in order to avoid being, laid off or let go. Have we contemplated what incentives might be given to teachers for early retirement that we haven't factored into the budget at this point?
I don't think the Board of Education has. Of course, in their case also, particularly in the certified staff, they're members of the Teachers Retirement Board pension plan, and that does not impact us, nor do we have the flexibility to offer them anything, any golden parachute or sweetheart deal.
Right.
For the administrators or those who are recipients of Teachers Retirement Board payments.
Okay. Thank you.
Anybody else? I'm going to go to Mr. Tetra.
Thank you, Mr. Chair. We heard from CCM on this. Did we hear any intel back from CCM or any other sources that if the governor doesn't get, as much as the budget is finalized, if the governor doesn't get his givebacks from the unions, his Plan B, at least as was published in the paper, said, Fairfield loses $2.4 million. Some of that might be scare tactics, some of that might be real. He might get some givebacks and not all. Any feedback, estimate, guidance from either the state or CCM as to what might be happening?
I haven't seen anything other than what has been in the general press as far as that's concerned. I think the only thing I go back on is where there have been significant modifications. I go back to 2 years ago, for example, when First Selectman Flato particularly discovered where the stimulus money was going, and we were able to modify the Board of Education budget. When there have been significant changes in revenue like that, legislation is often passed which gives the municipality the opportunity to change what you might, what you will do tonight at some point here. So if at a subsequent date, the General Assembly were to change this number, and when you look at, when I talk about this number, the number of the 8,451,000, which we're relying on at this point in time, if that number were to change dramatically, I suspect that there would be some legislation which would give our community the right to go back and reset the mill rate.
Please?
Have we had any discussions with our state delegation as to whether any of that legislation is contemplated based on this? or in the
Not
works?
specifically, no. I'm just going on what happened 2 years ago with not a similar, well, a similar situation where there was a realignment of revenue.
Yeah, but we caught that early enough. We were able to change the budget before we got to this point. We didn't have to go back and open up the budget and change the
We
tax
didn't,
rate
we
to
didn't,
address
but
that.
there were several other communities throughout the state that didn't catch it, and
Let's take it another step then. Without any special legislation, the mechanics of what would happen. Let's say the governor cuts our budget, or the aid we get, $1 million. That's money that is currently planned on coming into our general fund. Is that correct?
that's correct.
Okay, if it comes into the general fund, we've already agreed to what the Board of Ed is getting.
Correct.
So that means that general fund reduction would have to be on the town side?
It's got to be spread someplace. I mean, it's really, when you're losing revenue, I mean, we've got an expenditure budget. The RTM has agreed to a certain level of expenditures. It's then incumbent upon this board as to how you're going to finance that level of expenditures.
So the options,
Yeah, go ahead.
the options are either to cut expenses or to take the money out of surplus. Since our revenues...
Well, between yourselves and the RTM, though, you've given authority to spend $263 million right now.
Understand.
Right, and roughly 47 of that is pretty much fixed, because we'd have to have the Board of Ed's permission to take it back.
Plus the debt.
Debt is fixed. So if we were going to cut expenses, the only opportunity would be to cut expenses out of what is known as the town side budget. Right? Or to possibly continue to fund the town side budget at some level, if not quite to that level, and take the balance out of our surplus.
That option always remains.
All right. I just want to, A, be clear that we had the mechanics straight, and second, see if anybody had any other creative thoughts, short of selling lemonade, on how to
Well,
address that.
thank you. The interesting part of what the conversation is, you talk about it rolling downhill. You just painted a scenario, Mr. Hiller, where if the governor doesn't get his concessions, then he has to revert to his Plan B. The taxpayers of the town of Fairfield are either looking at A, a reduction in services, or B, a potential tax increase to their local tax bill related specifically to whatever the reduction, perhaps as much as 2.4 million, as outlined in the governor's plan.
Potentially, I might also add that possibility exists for 168 other towns, too.
I understand, but I'm not worried about 168 other towns, I'm worried about us. And about us, if the concessions are not reached, and he goes to the stated Plan B, it could have a direct impact
Potentially.
on our taxpayers' wallets at a local level.
Mr. Chair?
Yep.
Just in the articles I read, in case anybody has any other, again, intelligence on this.
Yep.
I didn't see any mention of the special legislation. I think Mr. Hiller's comments are very reasonable, and
Yep.
it certainly was done 2 years ago. But
and
that's my
fair.
concern as to whether it's contemplated yet at doing that.
And let's get to that, because, thank you, because I was going to go to the next point. If we have a hole in this budget and special legislation is not passed, and that hole develops either because of state governmental action, or because something else is too high, or because something else doesn't happen, the two options are reduce spending, right? Or take it out of the surplus, otherwise known as the general fund, right? So the question immediately goes to my mind, what is our projected general fund balance at the end of this fiscal year, and what is that as a percentage of our overall budget? Because that impacts the bond rating. I mean the current year, Mr. Hill.
Well, the general fund undesignated balance at the end of the previous fiscal year was $12,286,000. You put me on the spot last week and said, how much are we
Right.
going, and that's when I asked Mr. Spino to turn the cameras off, and
made
he
headlines.
didn't. And I suggested $1.5 million in addition to that, so that would bring us up to, if I'm right, we're up in the 13 million 7 range, or roughly 5% of our, little in excess of 5% of our expenditures.
So we'd have 13.7 or so in surplus that if you dipped into, you would go below the 5%.
Right, and, you know, your obligation, your statutory obligation is to deliver a balanced budget.
Yep.
This sheet delivers you a balanced budget. I think the question comes, there are assumptions built in there, and the big one is the state going to be true to its word and give you $8,451,000, which is $234,000 in excess of what you're balanced at?
Yep. Yep. Any other questions? Mr. Tetra?
It's on a slightly different topic, Mr. Chair, if that's okay.
Is everybody done on this topic? Everyone understand the issues? Thank you for the heads up. Mr. Tetra, go ahead.
Mr. Hiller, you mentioned about the update from CCM and the revised government revenue. There was some question as to whether it'd be a property tax on boats. Was that included in the approved budget or not?
No, that's out. It's not mentioned here. There was another list from CCM as to what's not included in there. And that there were boats and aircraft. Obviously, we don't have aircraft, but the boat is out.
Then going on to the kind of property tax component, or what's it called, a property tax relief component, there's basically some additional conveyance tax, and that sales tax component that was in original version going directly to the town is now going up to the state, being put through some meat grinder, and we're getting our $250,000 back.
We're getting basically $397,000 more as a result of the, as you referred to, the meat grinder. I would think, you know, given what the what the February estimates are, taxpayers of the town of Fairfield, frankly, are going to pay more in the proposal than the $397 in.
Is this 234 here that I was talking about?
Now, the 234 is the variance from budget.
That's the net.
If you look at,
Oh,
on the
397, okay.
CCM sheet,
Gotcha. That's 397.
well, if you, the 397 is the property tax relief, which is the new grant.
That's a new upside we get to make up for the other cuts and adjustments in the revenue, and the
That
net
is
of all
correct.
that is 234.
That's correct. That, basically what it does is it redistributes, it takes all of the things that I mentioned, primarily in our case, the additional 25 basis points on the conveyance tax, the 10 basis points on the sales tax. Those are, and I believe some small amount on the hotel occupancy tax is still in there. There's also a cabaret tax. All of this money is pooled. It goes through I'll use your terminology, the meat grinder, and it comes out. I happened to be with you the other day when I gave you the list as to what we had gotten of all 169 towns. The city of Bridgeport, for example, on this property tax relief grant gets 2.7 million additional funds. It's a formula that is not totally dissimilar from the educational cost-sharing grant, because as an example, it's based upon population and upon wealth. We get, just as a comparison, we get $600 more than the town of Greenwich on this grant.
Great.
And Greenwich has a slightly higher population base, but
Mr.
Slightly
Tetri,
slightly higher average selling price on their homes.
yes, I think so.
Mr. Chair, are we going to spend any time or some time at discussing the collection rate that goes into this formula? I think that was one of the other components.
We will. I want to turn to the tax rate calculation page after people get their questions answered on this. Does anybody have any more questions on these topics? All right, seeing none, I want to turn to the page that Mr. Hiller put in front of us. It's the tax rate calculation fiscal year 2012. Mr. Hiller, first of all, based on our conversation, this page is based on the best available information, factoring in all the information we've previously discussed.
That is correct.
It does not factor in the additional $234,000 that is now projected we'll get from the states. It does not factor in any additional increase in unemployment compensation expense, as we discussed. It does also not factor in any appeals we may lose to the Supreme Court related to assessments, because those appeals are presumed to not be settled until after this fiscal year, and therefore would be accounted for in the subsequent fiscal year. Correct. Okay. And based on all those assumptions, as well as the assumptions listed here at the bottom of the page, the recommended mill rate that you calculated is 22.45 mils.
That is correct.
Okay. Let's, can you walk us down the rest of the page just so that we know?
Okay, the taxable grand list, going from the top, is $10,787,000. If we bill that at that rate, at 22.45 mils, that would generate a levy of $242,184,000. We estimate the senior tax relief, and there are three components there. It is taking last year's town senior tax relief. It is, and the second, what I'll call the second footnote assumption here, talks about this. We estimate well, we know what that number was last year. We have added $200,000 to that because of the modifications made by the RTM last fall in that ordinance, primarily in raising the credit levels. And it is a best guess. We have no way of knowing that. We're fairly certain it's going to go up, whether it's 180,000 or 220,000, it's conjecture. That leaves us with a net of 238,000. Oh, I should add to that. Also in that figure are the estimates that are carried for state revenue from the three programs sponsored by the state of Connecticut. For elderly relief, for disabled relief, and for the tax freeze. The tax freeze at this point in time is declining rapidly. There are only three properties, I think it's three in the town, where people are still eligible, frankly, because it's a very old program and they're just going to their final reward. Probably in 3 years, we won't have any money left on that. And so that money is, the thing you must understand is those properties are in the grand list, but we get money back from the state, and when Mr. Gorzolani issues a bill, he's issuing it with a credit based on those things. So that's the $3,974,000 number. That would generate $238,000. $238 million, I'm sorry. If we were to collect that at 98.89%.
Now, that collection rate, is that the collection rate we used this year? Remind us where that collection rate is as compared to prior years.
98, we're one, from where we were last year, it's 1/100% lower. We were 98.9 on last year's similar sheet. The supplemental tax is,
And there's no reason to believe that number's going to go down further or up further based on best available information this year.
I'll turn to Stan.
Well, keep in mind that we were at 98.9 last year with a lien sale.
Right.
We are not planning to do a lien sale this year.
Right.
So,
And where are you going to come out?
the answer.
Yeah, this year we're,
Before last, when we didn't do a lien sale, and we were in a similar economic situation, we were at 98.8%.
98.8 what? No, no.
We collected
98.80, 98 point,
98.80,
okay, so we were a little bit lower than this,
yes.
okay?
Mr. Chair,
Just historically,
just a dollar number?
the expected collection rate, which is this number, was generally set lower than people believed we would get to. And that has no longer been the case for a few years now.
You just gave me a softball. Is this rate set lower than what you believe we're going to collect next year?
Yeah, I believe it's maybe set higher than.
That was a hardball.
Yeah. Mr. Tetra?
Just, we're talking about percentage points here. Can somebody give us a number
Dollars.
as to what either .01 or, and if it's
10%
90, if,
would be 235,000.
A full
Tenth of
tenth.
a percent.
tenth, 242,000?
235,000.
Okay.
$23,000.
Uh,
Am I doing it now? Excuse me, sir.
A tenth of a percent, or are you talking a hundredth of a mil here? Where are we?
No, I'm talking about the percentage, the collection rate percentage. A tenth of a percent would be 235,000.
So, Paul, if you can do the math quick, if we
Well,
were to come in at,
there's two numbers you have to realize.
Paul, if we were to come in at 98.8 as opposed to 98.89, what would the number be?
If we went to, I'm sorry,
98.8.
98.8 versus 98.89 here, what would that calculation show us? Just so that we know the level of risk, because you're saying that we came in at 98.8, right? Yeah,
35%, 265.
somewhere in that area is what I think.
Mr. Chair?
Yeah.
While that calculation's being done, could somebody tell us what the collection rate is year-to-date, and through what date that is?
Have it.
I think you're, we got it last week, that's right.
As of today, it's 96.6.
96.6
96.6,
as of today?
yes. That includes the completion of all lockbox processing, and it includes the completion of all escrow processing.
What-
We're
what-
still processing on-time mail.
What dynamics, or what's the expectation that's going to get back up to 98.8?
Well, I mean, the other big thing that happens between now and the end of the year is that probably next Monday, I'll be sending files up to our printer to produce lien notices. And those generally will, all the people who forgot to pay an installment and don't realize it yet because we haven't sent out a notice since December, will pay.
How quickly does the money come in after that notice?
After that notice, the notice will go out about mid-month, and it's due back no later than May 31st. Otherwise, a lien gets filed.
Right, is there
then would be
some,
filed on June 1st.
looking forward, is there some reason we wait till after we set the mill rate to do that, or could we possibly do that earlier in the year so we'd know what the collection rate is a little bit closer by the time we're setting the mill rate?
Well, I mean, we have to complete the April collection
All right.
Okay,
so that we know who to send notices to.
but that's the structural
Yeah.
issue. Okay.
We basically, from a timing standpoint, have to deal with this every
What
year.
was that 96 number that you gave us? What was that number last year at the same time?
It was slightly higher last year at this time.
What's slightly?
I think 0.2%.
Okay. Mr. Brockfeld, please. Sorry. I can come back to you.
Thank you, no, I'm having a fruit leather. Isn't the appropriate question to ask what the collection rate would have been last year without the lien sale?
It probably would have been about 98.75, something
sorry?
like that, or 98.75.
I think the question also is,
What's
The-
the first question is, what's the difference between 98.8 and 98.89 in dollars?
you went just at 900s?
Yeah. That was the calculation we were waiting for, just so that we know.
It would be about 2 million, I would think.
You're on a commercial break.
A little over $2 million. $2,150,000.
Some serious change.
No, we always have the option, if we go through the RTM, to get approval for a lien sale. As you know, and I mentioned during my budget hearing, that last year we went to the RTM with a criteria of over 1 year of taxes and $10,000, in excess of $10,000 in taxes, and they raised that to $20,000, and we just hit 98.9 last year, even despite the fact that they raised the criteria. In fact, two of the largest delinquent taxpayers right now on our list of top 25 would not have met the criteria because they're only delinquent for 2009. So they would not have been included in the lead sale using the same criteria. And yet those two people account for 1.5% of the collection.
Mr. Chair, using your kind of terminology, that we're basically saying there's about $2 million in revenue that's at risk, perhaps not fully at risk, because the chances are we'll get some number in there, but it just seems like an awfully big risk number.
Okay, let's go through the other components here, and we'll come back to that, unless anybody has any other comments specifically to this right now. The supplemental tax, Mr. Hiller?
Supplemental tax is based on what the grand list was on this year's supplemental motor vehicle tax, plus 10%. And we feel confident that based upon conversations with the couple of major local auto dealers, that their sales are in excess of 10% ahead. There's no way, we won't know that number until mid-December, once we get that file from motor vehicle. But I feel comfortable with it, and obviously that the amount generated there is based on the 22.45 mils, and on that one, we estimated a collection rate of 95%, since that the collection rate is a little less.
Mr. Chairman?
Yes, Mr. Brockville.
Paul, correct me if I'm wrong, but I think in our favor, didn't the governor's budget get rid of the taxing of the trade-in of the cars?
Yeah, there was some adjustment on that, yes.
Which
Yeah.
the car dealer I
I
happened
know
to
the
talk
car
to was very
dealers,
concerned about.
went,
Yeah, but that helped,
particularly in
that's-
Fairfield County, on the
right,
upscale cars, went nuts on that one.
right, okay.
So then the last three numbers on the page are the amount to be raised by taxation, which is basically the net of the approved budget less the revenue estimate without the tax.
Correct, and that revenue estimate is what's consistently been in the budget, with the adjustments that were made by this board, with some adjustments, for example, on interest income and,
Right. So the biggest downside risks here are the collection rate, potential issues with the state, additional unemployment comp. The one upside that we have that we know of is the governmental potential in terms of the past budget for $234,000 extra, right? There's some play in the senior citizen tax relief, what that's going to be, as well as the supplemental tax.
I
But
think
those aren't large numbers.
on that one, I think we're within plus or minus 50,000.
Mr. DeWitt?
I just want to be clear, because I think one of these numbers is wrong. Did you not ask what would happen to the collection rate if it went from 98.89 to 98.80?
I did.
Right, and I think Mr. Hiller,
I got an extra zero in there.
yeah,
Yeah.
it's only 200, it's 211,000,
Yeah.
it's not 2 million. I think Mr. Hiller took it from 98.89 to 98.
Well, yeah, and I thank you for correcting me on that, because obviously,
one digit off, yeah.
1% of 234,000 is 2,350,000.
Well, I was going to say, 0.1%, as Mr. Corzolani said, would have only been $250,000, so.
Pretty big rounding error there, Mr. Hiller.
My calculator is, Mr. Brown will show you.
You an English major? Is that the
It
time?
needs a new one. It's not.
So,
The risk on that number is about,
Mr. DeWitt, thanks for the
200 and-
clarification there.
call it 230,000.
Okay, which is the upside that we have right now, potentially, by the government.
Correct.
Okay. Questions, comments, concerns? Thank you, Mr. Hiller, for walking us through this in that amount of detail. Anybody have any comments? Nobody on that side, nobody on that side.
Well, the only comment, thank you, Mr. Flynn, is, I mean, I'm repeating what you said, we have a 234 potential upside, and from the exact same source, a 2 million potential downside, to whatever number Mr. Tetro said he read in the newspaper, right?
Right. It was actually Mr. Hiller gave us the number.
Or, I'm sorry, Mr. Hiller. So,
Yeah.
okay, so it's kind of,
Right. Which we can't account for now anyway. I mean,
right.
you know, we can't assume worst-case scenario. Yeah,
Yeah, and that's assuming we go from 96% up to 98% or better.
exactly. Yeah, 98.8. But we were within 0.2 of that percent last year, based on what Mr. Gorzolani said. And we came out, now obviously we had the lien sale, so there's still some play in there. We're a few $100,000 either way there, right? That's what it sounds like. Collection rate. Any other questions, comments, concerns on that?
I think the only other number you should be aware of is if you move the mill rate, a hundredth of a mill, you're looking at roughly $107,000. So to get back to, on this one, I'm fairly confident with Mr. DeWitt's numbers. That, and that's at those figures, but, you know, that if you were trying to get to 98.8,
Right.
or estimating that, you'd want to go to 2247, which would generate another roughly $214,000 in revenue.
Okay. Mr. Tetro?
If that were to happen, what would that mean to the average taxpayer?
We don't have, well, we don't have figures yet on who the average taxpayer is from the assessor's office, but the figure that I gave the other day was, $1 million. $1 million was worth $40 to any taxpayer, to not just homeowners, but from the smallest residential property to General Electric. So, you know, that 2/100ths of a bill is, you're talking about
$250,000 or $10?
about $8,
$8.
$8.
All right. Any other questions, comments, concerns, board members? Seeing none, I'll go to the public. Any comments from the public on this item? Seeing none, I'll come back to the board. Do I have any motions? Mr. Tetro?
Mr. Chair, given that the risk factors in this budget, and given the collection factors, and given the fact that we're not going out on a lien sale, at least haven't planned to do one as part of this year, and given it's an $8 number, I would move that we consider, or we raise the mill rate from 22.45 to 22.47
Do we have a second on that? Mr. Polito seconds that. Okay, we have any discussion on that motion? Mr. DeWitt?
Just so I'm talking through this in my own mind. So if we do go up that .02 mils, that should offset our collection, what we think our collection offset might be,
It's,
and potentially be even greater benefit with the $234,000 that comes through,
well,
not including the $2 million governor's.
but on the negative side, we know we're going to have a larger unemployment compensation issue.
true.
And we don't have a factor on that, and it's.
Right. That's a
almost
big,
a
that's a big
calculate.
unknown,
We've-
right?
We've got a couple of unknowns there, so this just lowers the risk a bit. It doesn't make it go away.
No, I'm in favor. I think that's a great, great idea.
Any other questions, comments on this item from board members? Okay, seeing none, I'll go to the public. Any comments on that? All right, so as amended, I'm going to, yeah, we have to pass the amendment. So we want to pass the, we want to vote on the amendment to raise the mills in front of us from 22.45 to 22.47. Okay? All in favor? Opposed? Abstentions? That carries unanimously. And now, before us is a mill rate, a recommended mill rate of 22.47. Any other questions, comments, concerns on this? Go ahead, Mr. Kiley.
Thank you, Mr. Chairman. I'm just double-checking my math, and I believe if I followed it correctly, on a house with an assessment of $500,000, I came up with $10. Does that make sense?
For,
The movement
for a
from 45 to
$500,000 house,
47.
yes, yes.
That does make sense. Okay, thank you.
The guy who said it was $2 million a couple minutes ago says, yeah, you're right. I'm only teasing, I couldn't resist that.
All right.
All right. I'm feeling
Been
good.
some late nights. We missed you the last couple of nights.
Zing.
Any other questions, comments, concerns? All right, seeing none, can I have a motion? Let's vote on this. All right, so the item before us is to set the mill rate for the fiscal year 2012 at 22.47 mils. All in favor? Opposed? Abstentions? Motion carries unanimously. The mill rate is set. Thank you.
Excellent.
Mr. Hiller, thank you for all the hard work. In all seriousness, I know that with what's gone on at the RTM the last couple nights and the Board of Assessment Appeals going late into the evening on Monday night, I know you had to scramble to get this done. So thank you very much for the hard work. All right. The next item is to hear, consider, and act upon any communications. Mr. Heller, I don't have any.
Well, the communication I did distribute to the board, and I don't know where you wanted to take this in
Yeah.
the, Mr. White, at the quarterly review meeting last week, there were several open items that the board wanted to discuss, particularly pertaining, I don't know if you want to handle it right now, or Mr. White is here and is prepared to discuss these things. He distributed a memorandum, which we emailed to the board this afternoon. I've got hard copies, and I've got additional hard copies for the public on three areas. First, the status of the fuel cell at the WPCA. Secondly, where we are as far as the snow budget, and though it's chilly out tonight, we think it stopped snowing this year. And the third is the oil tank that was removed at the DAR Old Academy building last summer, as to what the status of that is, and the removal of fuel tanks at various fire stations. Mr. White's here, has distributed this memo, both electronically and in hard copy this evening. So, at your pleasure.
Thank you for coming tonight, Mr. White. I found the memo very useful for our, per our discussion of last week. Does anybody have any questions on any items related to the memo? Yeah, Mr. Tetra.
I believe our question was about the oil tank spill and cleanup that took place near the church on Town Green, that we had initially used, or were told that we used the bonded money for, and then we were told that it was adjusted and taken out of the DPW budget, and I don't see that listed here.
Correct. Paul has a schedule to explain that, but showing that the transfers.
Passing out an email from Mrs. Bossy, the controller, that explains that slightly over $56,000 was expended in that effort, of which $29,000, I'll wait till it gets passed to board members. This was the removal of the oil tank on the north side of the old academy, between the old academy and St. Paul's Episcopal Church. $29,000 was spent to Kerrigan's in the start of this, and was expensed in last year's Public Works operation budget's fees and professional services. The job was completed. As you see, there had been 2 payments to 2 separate vendors, Complete Excavating in excess of $13,800, and AMC Environmental for the various testing required under DEP regulations in excess of $13,000. And those accounts have been expensed in this year's operating budget of the Public Works Department. They were originally incorrectly expensed into the capital non-recurring. There were in late February journal entries that brought them into the Public Works Department budget.
So just, what did Kerrigan's do for us?
The way this proceeded was Kerrigan was the low bidder for the project, which included excavation, take out the tank, and then he had a unit price in there for removing dirt if it was contaminated. AMC, the environmental people, are the people overseeing the project. Removed the tank for $1,000 plus. It was a very extensive contamination. We started to remove soil. We were getting close to right up to the fence of St. Paul's nursery there, and we decided to call a timeout to rebid it to get a better price, and also to give us some time to work with the people at St. Paul to, do the excavation when they weren't having their nursery school, and, make the assurances that we would clean things up, et cetera. So that's why the bill got broken up like that. So we rebid it, brought in Complete Excavating to finish it up for that $13,000.
Okay. What were the dates involved in doing this?
I apologize. I'd have to look back. I just know the period between when we stopped the first excavation and picked up the second one was probably about a month and a half, because I think we started in June, and we had to work with their August recess. So it's that type of time frame.
Do we, it would be my understanding of the normal workflow that we in fact would test the soil to see if it was contaminated before we processed it, moved away, that type of stuff. I'm surprised to see that the testing bill come in a different fiscal year than perhaps when we,
Yeah, he was on, I'm not too sure I can explain that. He was on site from the beginning when it was discovered. I'd have to look at that if he just billed us afterwards. I understand your point. I don't have an answer. But he was on site as soon as we hit the oil to assess that it needed to be removed, take samples, and make sure that the contractor wasn't removing any clean soil. So that's a good point. I'd have to check that.
Okay. That's all.
Mr. Stone?
How big was the tank?
Excuse me?
How big was the tank?
500 or 750 gallons.
And
It
then-
obviously been leaking for quite a while.
But what was Kerrigan charged $29,000 to do what? That's what I don't understand.
Kerrigan's charge was to go in there, remove the tank, and take care of any contaminated soil that was found.
And then what's complete excavating? It just seems like a lot of money.
It certainly is.
But to remove a tank of, I mean, that's not even a 1,000-gallon tank.
Right. It was less than $1,000 to remove the tank.
And then all the rest of the stuff is cleanup.
Exactly. Excavating it, putting on a truck, sending it up to an approved incinerator in the state.
Okay.
Mr. Bolito?
Mr. White, just to go through the time frame, and when you called the timeout, the Kerrigans did the initial work, then AMC went in and was doing the cleanup. They said at that point, because you were getting close to St. Paul's nursery school, that you called the timeout and then rebid the rest of the project. Were you not satisfied with the work that AMC did?
No, AMC is always the environmental hygienist. He's just a monitor.
Okay.
The Kerrigan was the first contractor that went in there, removed the tank, and was
Okay.
dealing with the initial contamination,
Right.
contaminated soil. Because we got right up to the fence, and because, the bills are really piling up fast,
Right.
we called the timeout to rebid it, and brought in complete excavating.
Okay. So Complete Excavating came in and finished up what you had contemplated Kerrigan's doing when you initially bid it, correct?
Yes.
Okay.
Yes.
Is that something that's done regularly, or something that's, is it something unusual to rebid a project in the middle of it?
Yes.
It is?
Yeah.
Did Kerrigan's have a beef with it? Did they sue to finish the job, or?
No, they obviously made a lot of money off it.
Yeah. 29 grand.
I know. But, no, we told them that, no, they understood that, because there was two reasons why we asked them to leave. One was that we wanted a timeout to rebid it, but also we told them we couldn't allow them to continue to go until we had made arrangements with St. Paul's to
Right.
take down the fence, take apart their nursery equipment, swings and that. So they would have to go leave, remobilize, and
They had other
they
jobs.
understood that, yeah.
All right, I got you. Thank you.
Any other questions related to this item? Seeing none, I do have one of my own on the Public Works operation, the snow budget overage. Here, I asked one of the questions last week on this during our quarterly review, and this is why. So just hear me out. The explanation's pretty good. I got an email from one of the Little Leagues that said that field maintenance on many of the fields were being deferred, particularly on weekend timeframes.
Right.
And the original email that I got blamed budget reductions.
Right.
Yeah, hey, the politicos reduced the budget, so they're not keeping up the fields because DPW doesn't have the funds.
Right.
To which obviously I was relatively sensitive to and wrote back and said, look, I don't think this has anything to do with budget reductions, considering the budget was passed last year,
Correct.
right? And if that had happened, I'm sure they probably would have notified you beforehand.
Correct.
I think this is more along the lines of they had a very tough winter, and they had to put a lot of resources towards the winter work, as well as there was a lot of extra work at Penfield Pavilion. And I'm assuming they're managing their budget to stay within their overall budget lines, and they need to reduce spending in certain areas. And basically, I was talking to Mr. Hiller and saying, A, number one, is my assumption valid? And B, what kinds of services and what kind of things have you had to do within your budget in order to keep that up? And C, I wanted to commend you for trying to do that, and thank you for trying to manage within your budget. But
Right.
what kind of impact has that had, and what kind of services have you had to cut back on?
Right. Just to back up for a second on that issue with the field and the
Yeah.
notice that we sent to the coaches, we probably could have worded it better.
Whatever, I mean,
Certainly, the goal was to give them a heads up, and
Right.
it wasn't to really make a major change in our policy, but to kind of fine tune it a little better with respect to when you call it, if it's going to rain, and, taking those chances to have the crew show up
Yeah.
when you're kind of like 60% sure that the field's not going to be playable. Why have them show up that morning? So we're trying to fine tune it, and it did get misinterpreted a little bit, but it wasn't any intent to cut back on the service. It was just to be a little bit more careful with the way we made our decisions, which would help us to be a little bit more prudent with the way we spent our overtime money. Other than that, we haven't done anything watching everything closely,
Okay.
but we haven't cut any services. I sat down with Scotty, we've done this a few times, we've done it as recently as the other day, taking the existing year-to-date budget and projected out to the end of the year what we expect we'll end up with. And we felt with a high degree of certainty that we'll come in balanced based on having the advantage of at least 215,000 left in our personnel account because we had vacancies. And also, we'll have 210,000, which they'll book as a receivable for reimbursements from FEMA. And then we have some small amounts in different accounts that will break us even for the year.
What condition are the roads in after the tough winter? I mean, we talked about how much was expended with snow removal and all that. I'm imagining that it's been a pretty tough spring cleaning up the roads as well, is that?
Certainly more potholes than average, a lot more damage on the curbs that got hit this winter because the visibility and not being able to get close to the curbs, et cetera. And the freeze-thaw cycle, because of the extreme, fairly cold winter, has taken its toll in terms of opening up cracks on the road and things like that. But we intend to spend, the money that we have here, and we can do everything we need to do to get ourselves back or repair the damage from the winter. And then we're starting into the paving program with both feet, based on our, $3,750,000 of paving money.
On that point, with the rise in oil costs and all that, and given our prior discussions on asphalt and all that, there was a paving program put together and a multi-year bonding as well as funding within the budgets that I'm happy has stayed in the budget to take care of, I think, about 13 miles of road a year.
Correct.
With the spike in petroleum prices and all that, what are you going to be able to get to this year out of
Okay.
that budget?
Yeah, I'll ask.
Hey, Scott.
We should still be able to accomplish the 13.65 miles that we need to get done, but in all honesty, it's not going to be all asphalt overlay. Last year, we tried a process called CIPR, cold in place recycling, netted some pretty good results, and obviously, the difference is you're recycling the old macadam, not bringing in new, so the cost factor is significantly less. So I think we're going to be okay.
The oil prices running.
The oil prices currently, we budgeted 85 a ton. State opening bid was approximately 82 a ton, but there is a $5 escalation, so we are a few dollars over. That escalation will continue to rise, and when it does, we will probably be shifting to more of that CIPR process.
Okay, so you're still bent on getting the 13.65 miles done. It's just it might not be at the full Magilla that you wanted to do,
That is correct.
right? So you're going to have to switch to an alternative method that you've been comfortable with, but it's not as good as the regular asphalt that you were going to do.
Yeah, I think the jury's still out on whether it's as good. I'll tell you what it's not as good at is the cosmetic appeal to the residents. They don't feel the new, thick, black asphalt glaring at them. But in some respects, we found we had better results because we looked at roads that we asphalt overlaid last year, and the winter forced the old road underneath to crack through. The CIPR allowed us to go right through, let's say, for example, it was a 6-inch road. We went 6 inches deep, hitting the gravel, refining all 6 inches, and we had no reflective cracking. But, again, being Fairfield, there are residents who feel, I'm not getting my road repaved, you didn't give me a repavement, and I've actually taken some out and said, well, here's a road we did repave, and here's the cracks already. You got CIPR, and you don't have the cracking. But again, there is a cosmetic issue. It's not that good.
In fairness, how do you make the decision, just so that
To be
when they
frank,
start calling me and asking me, how do I tell them?
well, in fairness, the worse the road is, the CIPR is the right candidate, because we're kidding ourselves. If we're just taking a 6-inch road and taking 2 inches off and putting 2 inches on new, it looks great, but that 4-inch sin underneath is coming through. So the truth is, the roads that are in worse condition are gonna get CIPR. The roads that we're catching earlier, that we feel are pretty sound underneath, and we can mill the first couple inches and put 2 inches back on, we're gonna do that.
Okay. Mr. Bachfeld and Mr. DeWitt.
What's the savings of on a,
It does vary, and here's how come it varies. You can literally fly when you're doing mill and fill. For example, a milling procedure, you're going to net 10 or 12,000 square yards a day. When you're doing CIPR, it's 5,000. So you're looking at extra traffic control, 2 to 2.5 times, the process. Right now, the early numbers I ran on some of the roads, the closest was 20%. The maximum I reached was 35% cheaper.
to do CIPR?
Correct.
And that,
But again, what you must understand, because you will get these calls, there will be people who tell you, and in all honesty, hate to say it this way, but this is the reality I dealt with. My own crews were telling people, as taxpayers came out, you're not getting repaved, you gotta watch Scott, he's doing something different. And I'd field those calls and I'd tell the people, here's what I'm doing, 6-inch road, we take down 2, 4 inches cracks through. We're not getting the results that we need. CIPR, we're taking 6 inches right down to the gravel. Most people bought it, but they don't like the finished product. It's not as neat as a brand-new black road, but it's still smooth. It's achieves what we need it to do.
It's true that, just in general, that the learning curve with the residents when using these different techniques, which includes the micro-sealing, because in using the micro-sealing, especially on dead ends, those roads we couldn't justify doing them before. So we're doing them as a way to protect the road and push back when we have to pave in that. It does look better initially in that, but if they are off a main road that's being repaved, it's not as black. They don't think they're getting their full dollar's worth, so we try to explain it the best we can.
One quick suggestion, I mean, what I'm listening to is, it seems to me 20 to 30 to 40% savings.
Right.
And I hear you saying it might even be a better way to do it. And
I believe it
and I
is.
think you guys are absolute 100% experts in this area. I have total faith in your judgment.
Thank you.
It seems to me, one, we should be doing it this way. And number two, maybe on streets where you're doing this work, you could have a prepared leaflet or mimeograph sheet that you could slip under every door and every mailbox saying, look, we're doing this on your
Yeah, fair
street,
point.
and we're doing it in this fashion. It may look a little different than you're used to, but we found it to be a better and more efficient way to do it.
Yeah, we're perfecting.
a lot of money.
It is a lot of money. I'm very excited about the early results, but very concerned just the same, because we went out to bid, we hired a vendor, we're happy with his results, but we now found there's another vendor out there, and we have to rebid it, which we're willing to do. And this vendor has the ability, because CIPR basically takes up what's there and puts it back in place. But this new vendor has a procedure where he takes it up in what's in place and has a paving box to change the grade, which is key to us, because we have to evaluate the condition of the road and if it has the right slopes that we can CIPR and get it to the right grade again. So my savings are based on the early models where the guy's not using a paving box. You enter in the paving box, and I might narrow my savings. I'm not sure yet. We'll know that once the bid comes out. But we are excited, and most people, Mary happens to be a CIPR candidate, and she might not even know it. But Henderson Road was done, and what I loved about doing her neighborhood, one of her neighbors actually called us up, was thrilled to hear the process and said, you guys ought to go public with this. You ought to be putting it out in the paper what you're doing. He was thrilled with it. He said, this is unbelievable, And to your point, saving that 20, 30, 35%. But again, some roads, if you're factoring a lot more traffic control, you start eating into the savings a little bit.
Mr. DeWitt, I think you had a follow-up there, and then Mr. Brown?
No, just, what was the percentage of roads that got CIPR? Because I'll tell you something, I live on Davis Road. Davis Road is absolutely fantastic. I don't know what you put on there, the curbs and everything,
Right.
and after the winter, it still looks like perfect.
You got mill and fill, so that's new asphalt, and we're glad, because we traveled it and it didn't crack through, so we love it.
Yeah, it didn't crack at all.
We got our butts kicked when we curbed it. People said I'm making a city out of the town. One of the reasons we curbed
Oh, I
it.
love my curbs,
Yeah,
man.
some
Oh.
people love them. It's a love-hate relationship.
Yeah.
But one of the reasons, one of the reasons, one of the reasons we curb those areas,
getting a little
as
too
you know
personal.
from living there, you have a tremendous amount of slope, you have a tremendous lot of distance between drainage, and we have to really factor in, is it time to add a lot more catch basins and drainage, or is it cheaper to pave it and install the curb? And honestly, with slopes like Davis Road, you got to have a curb to protect the investment.
Yeah.
But I'm happy it's working out, but we'll be keeping an eye, and don't be surprised, next couple of winter cycles, it cracks, we'll be up there with the crack filler.
Okay, but what was the, so
So
what
we
was the
ended up-
percentage of
I'll owe
total?
you, because I don't think I brought it with me.
I mean, just rough numbers, half, third?
I would say we did half the roads mill and fill and about half the mileage with the CIPR.
Wow. So that's pretty significant. Okay, thank you.
Mr. Brown?
Quick question, will the road last as long?
I think it will, but again, and I'm really pushing this one, but I believe we might even get better longevity out of CIPR than we will the mill and fill, because I'll cite Mill Plain Road. If anybody wants to go down Mill Plain Road from Duck Farm to the Post Road, we are thrilled to have gotten it done last year, same time frame we did Davis, but we netted different results. That road is cracking as we speak. So already I'll be in there crack filling probably as early as this fall, and we'll watch that road, and if it starts to pull apart at the seams, go in there with a micro seal. Right off of there, we did Henderson, we did, let's see, Henry Street, Dunlea, Old Mill, Sycamore, and none of those are showing the cracks. So like anything else, we'll be looking at the initial investment of the mill and fill, now the cost to crack seal it, and if we go in there and fill it, I'll be putting more eggs in the CIPR basket. But again, we run some risks. Residents love the mill and fill because we're in and out of their neighborhood real quick. CIPR is a much more labor intensive, not only from the square yardage accomplishments, but the way we have to address the drainage and stuff. We're in there ripping out drains, then comes the machine by, then reinstalling drains. So the neighbors have to be a little more patient. We're disturbing the front of their households a little longer.
But if it works as you hope, it should last 20 years, correct?
Yeah, no, I don't even think when we say something will last 20 years, that's given the fact that we accept we're going to go in and crack seal it or do a micro seal or a chip seal. Gone are the days you get 20 years out of pavement. We had the old thought that you got 20 years out of pavements. Honestly, you don't get 20 years out of pavements anymore. The 20-year number is given that you're going to do maintenance, to gain your full 20 years out of it.
Okay, thank you.
Yeah, Mr. Kiley?
Thank you, Mr. Chairman, and thank you guys for all the great things you're doing. Can you quickly explain to me the difference between the CIPR and what I call the stone and the oil finish that I see on a lot of roads, and what the differences are?
Sure.
Quickly in substance, but also in price.
Yep.
It seems like the gap might have closed between the differences in those prices, and how you decide what road gets what.
Okay.
What treatment?
It's based on conditions. If you're trying to preserve a pavement, that's when you go in with your armor coat or your chip seal, which is essentially a liquid asphalt with a stone finish. I think you might be wanting to compare it to a micro, not so much you asked for CIPR, but I think you're looking at more of a micro.
More similar to that, okay.
Yeah, right.
Okay.
That is the cheapest one out there, a chip seal, and if the road's good enough, you can get away with a chip seal. The micro seal is really where I don't think the neighbors are going to be as tolerant as a chip seal, because when we walk away, you're left with a stone finish. For example, the beach area. We know from history they're not accepting oil and stone on their roads. So I would take a road and probably nudge a little more money out of pocket initially and do go forward with a micro seal down there. Areas like Greenfield Hill that don't mind the chip seal, they actually prefer it. Areas like Southport Village, they prefer the chip seal. We'll do the chip seals there. But they accomplish the same goal, which is essentially to seal the existing pavement. And then we branch out into more of the CIPR and the mill and fills.
And the chip seal is less expensive still?
Correct, still less expensive,
Okay,
yes.
thank you.
Yeah. And we're getting new fancy, we used to do just 2 styles of stone, we're now up to 3. It might not seem like a big difference to you guys, but it makes a difference to us because we're thinking of the mechanics in terms of building a road, so our initial chip seal might even be a 1/2-inch stone. We can go in 5-7 years and put like a 3/8-inch stone, go down again 5-7 years, put a 1/4-inch stone. And it's the thickness of that mat over those 15-20 years that work for us.
Scott's pretty excited here. Do you need some
Oh, I-
water or what?
I was just going to say,
Yeah,
beyond thank you for your hard work, thank you for your enthusiasm, because it certainly
I get into
shows.
oils and stuff, we had all sorts of fun stuff going on.
I'm trying to
I
restrict.
drive my crews
I'm
nuts,
an
trust
accountant, I'm not going to bag on you.
Mr. Bartlett and I are on the phone daily, I'm trying to restrain him somewhere.
I get a little carried away,
I know Mr. Bolito's got to follow up on the fields, I think.
Yes, thank you, Mr. Chairman. Just to follow up on the Little League fields for a moment, I understood what you were saying about the playability of fields and perhaps encouraging the leagues to be a little more conservative in terms of when to call games and when to try to play. That applies with the infield surfaces. But I've also heard some complaints about the grass not being cut in the outfield. Can you speak to that, please?
Want me to? Yeah. We ended up initiating, as many of you may know, we farmed out grass mowing strictly for economics. The bottom line is our labor rate and benefits, we can't compete, nor do I want to try to compete with what they can do in that service above us. This year, because of the wet spring, and any of us at home probably know, you go home one day, it's been cool and damp, the lawn's not high. 2 days later, you hit some warm temperatures, it spikes. We're calling a little close this year, waiting for the grass to take off, made the call, the grass sure took off. So the complaint you're probably referring to is Upper Tungus Hill.
Right.
I got the call Saturday afternoon. I got the contractor to come in Sunday morning and cut it for Sunday play. And I explained to the leagues that it won't happen again.
Okay, great.
All irrigated fields, just so that everybody knows, are mowed on a Monday, Thursday cycle. We've come up with that cycle for 2 factors. This relates especially to soccer, that we line paint Thursday afternoons and Fridays. This gives us a low thickness of grass for our weekend play and new fresh lines for our weekend play.
Great.
That's
Thank you
how
very
we
much.
come up.
Appreciate the explanation.
Any other questions, comments, concerns on any of the items related to this?
For the record, I'm excited about grass just as much as the paving. But
You couldn't tell, it wasn't just,
I get into that stuff.
What's your position on water?
I'd like to go more organics, cut back on the water and fertilize a little bit.
He's at his
go ahead,
best
Mr.
at snow
DeWitt,
removal.
he's on a roll.
It was real fun.
Yeah, just one quick question on the WPCA fuel cell. We were asking last time, and I don't believe you gentlemen were here, what the replacement cost of that. I see the data here about my company, and but we were looking for a number, if we had to go replace it tomorrow, what that would be. Did we ever come up with a number? Or even the number that this one originally cost us, I think was
This
one
one
of the.
originally cost $1 million. It was a $800 or $850,000 grant from the Clean Energy Fund on it. It's a 200 kW unit, 220 kW. They don't make that one anymore. They're now up to 440,
Right.
which is a little bit more than double that in price.
So $2 million
Yeah.
potential with a grant. Is there still a grant in
Well,
place?
we're exploring all the options. We're trying to, I mentioned in my email, we're certainly disappointed that the unit went down within a month after
Yes,
the guarantee
understand
ran out
that.
on it. And it had been obviously well taken care of because we hired the manufacturer to service it. We paid them
really?
as maintenance contract to do it. So that was disappointing. And so we're trying, and they're what do you call it, resolutions to date of, repairing one piece, or what they call a reformer, for about $150,000 without any guarantee that is going to keep it running isn't satisfactory to us, because we know there's a limited life on what's called the stack, which is the main piece.
Yeah.
Anyway, the bottom line is Ed Bowman, who's, worked on the grant and is in contact with, works really closely with the Clean Energy Fund people because he gets a lot of grants. He's putting together a pretty detailed history of it and sharing that with them with the hope that that will put some pressure on UTC to do something for us with respect to the new unit or give us a break on a replacement item.
Right. So in your notes in the background, it says that this year
Yes.
we'll be paying about $120,000 more for electricity because that unit's not there.
Right.
But that's not a whole year's worth of charges, is it? That's a whole year not being able to use that unit?
Yeah.
Oh, it is, okay. I thought that was less than, okay.
Yeah.
So $120,000 a year, so if it were still that $1 million or an $850,000, this would be a no-brainer.
Exactly.
We'd have return on investment 1 year.
Right.
Okay, great, thanks.
Yeah, no, we did okay with it in terms of making our money. Again, in the 4 years that we were operating after the first year, it's just that it's extremely disappointing that we anticipated it was going to last at least 10 years, that it went down in the water in 5 years.
All set? Any other questions, comments for the gentleman? Seeing none. Thanks, guys. Thank you. Thank you very much, guys.
Thanks, guys.
All right. Mr. Hiller, no other communications, correct?
The only other document that I will pass out, did to members earlier, we received from our actuaries this afternoon copies of the July 2010 Town Employees Actuarial Report. I have copies that I will pass out to the board. It's consistent with, obviously, it gives in much greater detail, but it's consistent with the details that Ms. Cherney spoke about at the, I believe, the January.
Could I ask board members to take the report then?
And she did say, because we met personally with her this afternoon in Mrs. Merrili's office, I would anticipate that we would have the police and fire report within a week.
Short, too.
Let's, what I'd ask is for board members to take the report. Let's get the police and fire report, review them on our own, and if there's a necessity to get a representative in here, we'll do that. Right, Mr. Hiller? Great. Any other communications, Mr. Hiller?
No, sir.
Great. I know I had a request from Mr. Tetro for a moment of personal privilege, so I'll do that now.
All right, thank you, Mr. Chair. As this may be my last meeting or possibly my next to last meeting, I asked Mr. Flynn to give me a moment of personal privilege. I want to take this time to say thank you to my colleagues, our tireless financial department staff, including Debbie, of course, our town department heads, the members of other boards and commissions, and the members of the administration who have worked with us to strengthen and improve our financial foundation for the town. I want to especially thank you, the voters, who gave me this opportunity. I look at how much I've learned and how much we all have grown in this past 6 years. Serving on this board has been an amazing opportunity to understand how our government works, but more importantly, to feel more a part of our town and a part of our community. Our board has come together and has made some great progress. There's still much to be done and new challenges ahead for our board and our town. I want to say thanks for the friendship, thanks for making the long hours and late nights enjoyable. For a group of volunteers that meets one night a month, except during budget season, we shared some great memories. It's a tribute to the members of this board who have set an example for future boards on how to place the best interests of the town ahead of politics or personal agendas. And I especially want to thank former Chairman Kiley and Chairman Flynn for their leadership in that regard. I would challenge anyone, after watching this year's budget discussions, to distinguish between a Democrat and a Republican, and perhaps even more to the point, I would challenge them to identify which 3 members of this board had expressed interest, or at least hadn't denied interest, in running for a well-known town leadership position. It's been a pleasure. Thank you all.
Thank you.
Thank you. Thank you, Mike. Thank you for your service on the board, your contributions, your wisdom, your hard work, your efforts, your team play and spirit of cooperation. I think that goes both ways. We've enjoyed having you on the board. We'll perhaps have you on the board for another month and enjoy that. And then, should things go in that direction, we'll enjoy grilling you for another few months after that.
We're still going to bring coffee, right?
Whenever you put me on the schedule, Mr. President.
So, we thank you, and does any other board member have anything else to say on this? No. Right now? No. Seeing none, thank you very much. Any other items? Mr. Hiller, do you want to explain? You
Is this the
passed up-
final?
Yeah, that is the control sheet, the first three or four pages.
This was handed out this evening, right?
It was.
I'm sorry?
This was handed out this evening.
Yes, and this is a product of last night's,
Oh, yeah, I got it.
this is the final, prior to, it shows the various, the last item, the
Mine says-
FY12 RTM line is the, what was adopted by the RTM. The back pages show the various cuts made by the Board of Selectmen, the Board of Finance, and the RTM. The RTM, in their roughly 8 hours of deliberations, lowered the budget by some $160,000 from what you folks had passed on to them on March 31st. 960,000. 800 plus another 160 on the town side.
All right. Are you good, Mr. DeWitt?
Good, yes, thank you.
All right.
Just a quick thing.
Please, Mr. Kiley.
Mr. Hiller, and this might be a question for all of us to think about, and I know we've talked about this before. Is there any way we can just cut down on this paper?
This,
mean,
this
I've got
this has come up,
literally
yes.
reams and
what we
reams
are
of
going
paper.
to start, and frankly, I think this is being dictated in part by action of the RTM. If you'll notice, in the Administrative Services Department, there was a reduction of some $2,100 in administrative services, which is specifically towards paper. So that the Administrative Services, which is the purveyor or supplier of paper in Town Hall, and what we are going to make an extended effort to do is to do it electronically, which will hopefully keep administrative services within their paper budget. And if you want to print it, it's going to be printed at your cost at home, and go from there.
Mr. Chair, could you direct that those cuts take place in the RTM paperwork first?
Well, I think the other thing, and we did this as far as the mailing for tonight's meeting, the call was distributed at last week's meeting and also to the RTM on Monday night's meeting. So we had, on this particular, for this particular meeting, we had 0 postage cost, which helped us. I think one of the things up until this past week, frankly, with all of the potential cuts, we didn't have, and we do now have, we didn't have a good RTM email list, which handicapped us. I think we have that. Of course, that changes much more often than this body does. But I think, we've got a pretty good list as far as that for electronic distribution.
But just quickly, and I don't want to be here all night, but beyond the budget cut, I mean, what are other towns doing, and what can we do to just cut back on the paper? I mean, is there some solution that other towns are using? Can we?
I
maybe
think
it-
the other
maybe-
town,
Can I
think
can I
one of the
finish?
things that we
May I finish,
started
please?
for the first time
May I
in
finish,
the
please?
last 2 nights using is bringing the laptops to the meetings and stuff like that. And I think the day's coming when, for example, a document such as this, that the Board of Finance would have access to a laptop here, and I think that day is maybe not immediately here, but I foresee it in the very, very near future.
All right, thanks.
All right. One last item, a holdover item. Last week, we talked about forming a subcommittee on to look at the investment policy for the town operating funds. We wanted 3 people on that committee from this board. Mr. Brown has stepped forward, Mr. Brockfeld has stepped forward. I have not had a third step forward. I do have an interest myself, so if there's no objections or no one else wants to step forward, I'll fill the third spot on that subcommittee, and we'll get working sooner rather than later. So with that, do I have a motion? Oh, yes, Mr. Stone.
Our budget subcommittee,
Oh, too late. No. Okay.
should we schedule a meeting?
Yes,
I will do that, yes.
I'll leave that to Mr. Polito. Yes. And I had asked for that for last meeting, so thank you, so we'll get that going then. Mr. Hiller?
Yeah, as one additional follow-up, we discussed last week also a couple of items, and if there's any others, for the June meeting, report on the pension situation with our consultant and hopefully Mr. Malarkey, chairman of the Joint Investment Committee, Mr. Perno from PMA, as far as the workers' comp situation is concerned. The only business item that I anticipate will be the requested transfer of funds for the proper funding of the THEA contract, which was adopted by the
RTM.
RTM. And unless there's objection, what I would like to do is also put that in place for the next fiscal year, too, because those funds are not in the budget, so it'll be kind of a
Let's talk
two-year
about that
item.
offline and see how we go about it. That's fine. Thank you, Mr. Hiller. Anything else? Seeing none, do I have a motion? Mr. Brockfeld, second, Mr. Polito, all in favor? Opposed, abstentions? Thank you, everybody. Right.
Amazing finish.